A further 10% correction for Bitcoin looks imminent, and I have an Ethereum short position trade of 20% I'm going to show you at the end of this video. Let's start off on the daily and begin with showing you the new pattern I see, which could bring us to 97,000 US dollars, and that is a rising, broadening wedge. We can have our support line like this, our resistance line like this, and we can see the price target for this one is going to be measured from the broadest point of the cone or the funnel pattern to the potential breakout, all giving us, whether we break out now or in the next few weeks, a similar price target, which is down at 97,000 US dollars, a 10% trade. Now, why is this so important? Well, let's go over to the weekly, and I'm going to pull up the EMA ribbon and go back ever since the start of this bull run. And what we can see is at the point at which the 20 EMA ribbon, the yellow, took the lead, went above the 20, 25, 30, 35, so on, all the way down to the 55. So when the yellow's on top, the red's on the bottom, was the start of this bull run. We can see the candlestick patterns broke above that line at the point at which the yellow flipped, and we've been above the EMA ribbon, supported by them ever since. Now we have a couple of wicks, but at no point have we closed below, so far, the 50 EMA ribbon. So we can see the second to last ribbon right there. We closed above. One big red candle, followed by green, and we bounced straight back off. Again, same thing happened here in April. We went straight down to the 50, we wicked below, but the closes on the weekly time frame are all respecting the 50 EMA ribbon, and then we continued our run up to the point at which we are now. So if we get this 97,000 US dollar price target, what I see happening is we go down to it, wick below on the weekly, and then our weekly candles, they're closing on or above the 100,000 US dollar price target, which is the 50 EMA ribbon, as we've seen has been respected ever since this bull run. If we close below them, I think it's a sign that we are in for a bear market and we're not going to reach another all-time high this bull cycle. So pay attention to the daily and the 4-hourly to see when we break out this pattern, and if you want to take advantage of a short position, you can, and that is my price target for Bitcoin. But I also have an Ethereum trade of 20% to show you, which is broken out in the last few days, and there's still opportunity to be involved in this trade because we're actually in for a potential confirmation. So let's go over to the daily, and we can see we have a long-term trend line that's been supported, but we've just broken out over the last week, coming up to test the previous support, check if it's a resistance. Hopefully we get rejected by this line if we're looking to short it, and continue the price action downwards. I will get involved in this trade if we close a candle below the 3,750 US dollar level, or if the price action goes below 3,500. So without a close, 3,500. If you're looking for candle closes, I'd look for a close below 3,750. And the price level I would be targeting, because I don't have a specific chart pattern trade, what I would do is I'll pull up the Fibonacci extension retracement tool, going from the swing high to the swing low, and I'll be looking at the 0.5 US dollar level, and lastly the 0.618, the golden pocket, and the most important Fibonacci level. So we can see we're respecting the 0.382. I would take profits at 3,200, and then lastly I would take all my profits, if I have any left, riding on a short position down at 2,800 approximately. And again, as I said in the beginning of this video, this is a 20% trade if you're looking to trade this at that confirmation point, which I would do personally. Hope you enjoyed the video. If you did, put your Ethereum price targets down below and see if you have any chart pattern trades that give you specific price targets that would be interesting, and hit the notification bell, and I'll see you in the next video.